Let's kick things off with Alphabet. Alphabet delivered a blowout earnings report this weekend, surprising Wall Street with stronger than expected results. The company reported $90.2 billion in revenue for the first quarter of 2025, up 11% year over year, while earnings per share reached $2.81, sharply above analyst expectations. Net income rose to $24.7 billion, a 46% increase compared to last year, and operating margins expanded to 34%, showcasing strong cost discipline and growing profitability despite a mixed macroeconomic backdrop. Alphabet's search ad revenue climbed nearly 10%. YouTube gained traction from direct response ad initiatives, and management authorized a $70 billion stock buyback to support future growth. Analysts raised their price targets, and CEO Sundar Pichai emphasized the company's aggressive expansion into AI-driven search and cloud infrastructure, with plans to deploy $75 billion in capital expenditures to sustain leadership in artificial intelligence. In the short term, Alphabet stock could continue advancing, with potential to test the $190 to $200 range within the next quarter, fueled by strong earnings momentum and innovation investments. Turning now to Tesla. Tesla reported a challenging first quarter, posting a 71% decline in profits year over year, with earnings per share dropping to 12 cents and revenue falling to $19.3 billion. Gross margins compressed significantly due to aggressive price cuts and rising input costs, with automotive margins excluding credits dropping to around 12.5% and operating margins shrinking to roughly 2%. Tesla also faces external pressures, including heightened US-China trade tensions that forced the company to pause Model S and X orders in China. Elon Musk acknowledged the macroeconomic uncertainty, warning that geopolitical risks could meaningfully impact consumer demand. Nevertheless, Tesla demonstrated resilience with $2.2 billion in free cash flow generation and reiterated its commitment to launching a lower-cost mass-market electric vehicle and an autonomous robotaxi fleet in 2025. While volatility is likely to persist, Tesla shares could attempt to stabilize between the $155 and $175 range as investors look toward upcoming product milestones and broader macroeconomic stabilization. Next up, let's take a look at Eli Lilly. Pharmaceutical leader Eli Lilly surged this weekend following successful Phase 3 trial results for its new oral weight loss drug, orforglipron, which delivered strong efficacy in diabetic patients and positions Lilly ahead in the race for non-injectable obesity treatments. The company's already robust metabolic disease franchise, anchored by blockbuster drugs Mounjaro and Zepbound, continues to drive extraordinary revenue growth, with Lilly forecasting 32% top-line expansion for 2025. CEO David Ricks emphasized that Lilly is entering a new era of innovation and scale, with heavy investments in manufacturing capacity aimed at supporting soaring global demand. Wall Street analysts remain highly bullish, projecting double-digit revenue growth through 2026 and viewing Lilly's expanding product lineup as a major competitive advantage. In the short term, Eli Lilly's stock could extend gains toward the $800 to $825 range, fueled by clinical successes, global expansion initiatives, and dominant positioning in the rapidly growing obesity drug market. Let's shift gears and talk about Bitcoin. Bitcoin surged near the $100,000 mark over the weekend, briefly reaching $94,000 amid renewed safe haven demand as macroeconomic uncertainty intensified. Bitcoin's rally is being fundamentally driven by weakening confidence in the US dollar, surging institutional inflows into Bitcoin ETFs, and a decoupling from traditional risk assets. Data shows over 70% of Bitcoin's supply has remained unmoved for 6 months, reflecting strong holder conviction. Robert Kiyosaki reiterated his long-standing projection of Bitcoin reaching $180,000 to $200,000 by the end of 2025, while other analysts forecast a more immediate move toward $110,000 if ETF inflows remain consistent. In the short term, Bitcoin could retest $98,000 to $100,000 within the next 6 to 8 weeks, contingent on continued risk-off sentiment and sustained institutional buying momentum. Now, let's check in on Ethereum. Ethereum maintained steady upward momentum this weekend, trading in the mid-$1,800 range as the network continues to strengthen following the merge upgrade. Developer activity remains robust, with upcoming improvements like EIP 4844 and proto-danksharding expected to significantly enhance scalability and reduce Layer 2 transaction fees by late 2025. Ethereum's fundamentals have strengthened with a deflationary token supply model and increasing adoption across decentralized finance, NFTs, and enterprise blockchain initiatives. Regulatory developments in Europe and expectations for a future Ethereum spot ETF approval in the United States are boosting institutional confidence. Analysts forecast Ethereum could reach $6,000 during the cycle, while capital rotation from Bitcoin into Ethereum is expected in the coming months. In the short term, Ethereum could climb toward the $2,000 to $2,200 range as scaling improvements and institutional narratives gain traction. Let's dive into XRP next. XRP captured headlines this weekend after the U.S. Securities and Exchange Commission officially ended its lawsuit against Ripple and simultaneously approved the first XRP futures ETFs to begin trading. The regulatory clarity marks a historic victory for Ripple, clearing the way for broader adoption of XRP as a bridge currency in global remittances. Ripple's CEO emphasized that with the lawsuit settled, the company intends to aggressively expand partnerships with banks and fintech firms both in the United States and internationally. XRP's cross-border utility and extremely low transaction fees position it well to capture growing demand in the global payments sector. Analysts foresee XRP challenging $2.50 in the near term, with potential to retest its historical all-time highs above $3 if institutional adoption accelerates. In the short term, XRP could continue rallying toward the $240 to $260 range as liquidity and trading volumes normalize post-settlement. Now a quick update on Binance Coin. Binance Coin climbed back above $600 over the weekend, buoyed by renewed optimism in the broader cryptocurrency sector and signs of stabilization within Binance global operations. Following founder Changpeng Zhao's departure and the settlement of regulatory charges, Binance has refocused on compliance-driven expansion, securing licenses in Japan, Dubai, and several European countries. BNB's utility continues to grow with Binance dominance in global trading volume, periodic token burns, and the expansion of the BNB smart chain in decentralized finance applications. Binance's new CEO reaffirmed a commitment to regulatory transparency and user growth, helping to stabilize platform activity after last year's turbulence. With BNB supply continuously reduced and trading volumes rebounding, analysts project that Binance Coin could revisit its all-time highs around $680 to $700 if crypto market sentiment remains positive. In the short term, BNB could consolidate gains and trend toward the $630 to $650 range as exchange activity and DeFi usage accelerate. And finally, let's wrap up with Solana. Solana remains one of the strongest performers in the cryptocurrency space, driven by explosive growth in decentralized trading volumes and a resurgence in on-chain activity. Solana's network, now operating with near-perfect uptime, leads public blockchains in daily decentralized exchange trading, fueled by its ultra-low fees and sub-second transaction speeds. Core developments like the forthcoming Firedanzo validator client are expected to further enhance Solana's performance and decentralization. Major adoption milestones, including Visa's stablecoin settlement pilot and new gaming and DeFi initiatives, are reinforcing Solana's growing ecosystem strength. Co-founder Anatoly Yakovenko emphasized that Solana is positioned to handle a massive scale of real-world applications, envisioning the blockchain as a backbone for future decentralized financial infrastructure. Analysts anticipate Solana could retest its previous highs near $260, with longer-term upside toward the $500 level. In the short term, Solana's momentum could push it toward the $160 to $175 range, supported by accelerating DeFi adoption and sustained network reliability. Stay informed and stay ahead. Subscribe for weekly market updates and insights you won't want to miss. Thanks for watching.